What's up everyone, it's Kadi with Money Vesting. So in less than 12 hours, we've got the inflation numbers coming out. I will be live tomorrow morning at 8 a.m. Eastern to cover those CPI numbers. But in this video, I wanted to go over the expectations, what my personal opinion is going to be, the perspective that I have to share here. And you can also comment down below what you think inflation numbers are going to look like when they come out tomorrow for the month of March. So I hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. I did share 2 brand new private videos for all the members. You can access the trade ideas and the wheel strategy. So links are going to be down below if you're interested in joining. And I did also include the 16% annual discount that's once again available for everyone till the end of this month. So link's going to be down below. This right here is the CPI expectations, and the month over month is 0.3%. We've already gone over this before, but year over year is expected to slow down dramatically from 6 to 5.2%, and core, which is going to be ex food and energy, 0.4% increase month over month, and for year over year to sit at 5.6%. So we are expected to stabilize in terms of that core CPI. That's going to be the real key takeaway here, because the expectation really is for core to take up and also be higher than headline CPI on a year-over-year basis. This is my base case. This is my bear case. This is my optimistic and bull case, which I've already broken down in my previous video. I'm going to share some more details here in just a minute. And this is going to be the Cleveland Fed estimates for March: 0.3% CPI, 0.45% core, and expecting on a year-over-year basis for CPI to be at 5.2% and 5.66% core, and for core PCE to be coming in at 4.6% year-over-year and to increase 0.38%. So this was updated as of April 11th. So again, very, very recently, just today. And the expectations are for us to see an increase, right? And this is another really interesting report. So what Adobe does is that they actually have a DPI, the Digital Price Index, which is a little bit different than the Consumer Price Index, which is a CPI. So Adobe's DPI is a comprehensive view into how much consumers are paying for goods and services online. Okay, so it's digital. That's why it's digital, because it's online, and complementing the Bureau of Labor Statistics Consumer Price Index, which captures offline prices. So powered by Adobe Analytics, the DPI analyzes 1 trillion visits to retail sites of over 100 million SKUs across 18 product categories. And these are electronics, apparels, appliances, books, toys, computer, groceries, furniture, bedding, tools, home improvement, home garden, pet products, jewelry, medical equipment, supplies, sporting goods, personal care products, flowers-related gifts, non-prescription drugs, and office supplies. These are all things that DPI calculates, which is Adobe's Digital Price Index. And in March, 10 of the 18 DPI categories saw year-over-year price decreases, with the flowers-related gifts category falling the most at 24.3% year-over-year, and 8 categories experienced year-over-year price increases, including personal care, office supply, pet products, groceries, non-prescription drugs, tools, home improvement, medical equipment supplies, and apparel as well. On a month-over-month basis, 10 of the 18 categories saw prices fall, and prices increases were observed in 8 categories, including office supplies, jewelry, pet products, groceries, non-prescription drugs, appliances, and medical equipment supply and apparel. These right here are going to be specific categories. So groceries, you'll notice that prices rose 10.3% year over year, up 0.4% month over month. These are online groceries. So it's possible that we do see food prices increase once again, as we have been seeing over the last several months here. So it's possible that we see, closer to 0.4, 0.5% increase month over month, but they have slowed down in the past 6 months, rising 11.4% year over year in February, 12.6% year over year in January. So we have been coming down on a year over year basis, but we are still increasing on a month over month basis. Personal care prices were down 1.5% month over month, but up 4.4% year over year. Furniture and bedding down 0.3% month over month. Electronics were down 1.3% month over month, so that's good, and dropping to 12.9% year over year in March. And apparel prices were up 1.8% month over month and up 6.6% on a year over year basis. So considering how shelter prices and groceries, food, and energy make up majority of inflation, I do believe that considering energy prices have been coming down, although they have been a little bit more flat in the month of March, if anything, prices have actually slightly gone up. It's possible that we do see gas prices or energy or oil maybe tick up a little bit. Groceries and food prices are in fact up according to DPI, Adobe's DPI, so Digital Price Index. It's suggesting the prices were higher, so I wouldn't be surprised to see an increase in month-over-month prices for food. And then finally for shelter, that's a bit of a wild card because it has been coming down according to apartment listings and rents.com, but everything else we're not really seeing that being reflected in the actual CPI report. So I am leaning a little bit more towards the base case / bear case for inflation. I would not be surprised if we do end up seeing core increase by 0.4% or higher, and year over year for us to be at 5.6% or higher, and for month over month headline CPI to be 0.3% or higher, or year over year to come in at 5.2% or higher again. In that research paper that I shared a couple days ago, that research paper also talks about how the first half of 2023 we're kind of comping over the lower gains from first half of 2022, and as a result it's possible that on the surface inflation may seem like it's going down, but we're just comping over some very easy numbers from last year. But towards the back half of 2022, that's when inflation really started to go rampant, especially in June, July. We kind of peaked at around 9%, and then we started to come down. Then it's possible that towards the back half of 2023, once we start comping over some of the more difficult numbers, it's possible that we once again stabilize for inflation and start going sideways, or maybe even start accelerating back to the upside, which obviously is not going to be good from a Federal Reserve standpoint. Now, speaking of the Federal Reserve, this right here is going to be the Fed Watch tool. Very quickly, I want to break down the expectation for the market going into May meeting. And right now, there is a high probability that we're going to see a 25 basis point hike, almost a 70% probability. However, the markets are still very much optimistic about rate cuts. So we're still expecting at least 9 cuts all the way through September of next year. And the market's expecting a hike, 25 basis points in May, staying there for another meeting, and then rate cuts starting in July all the way through September of next year to bring the rates down to 3.25%. We've also seen rates as low as 2.5% to 2.75% in this Fed funds futures. So markets right now, if you come over to the futures, we are slightly flat. Again, that's all going to be in anticipation of what the numbers are going to look like in the next 10 to 11 hours when they come out at 8:30 a.m. Eastern. Don't forget, I will be live to cover that report. S&P 500 is kind of battling through this bear camp. Pretty strong resistance sitting at 41,400. And we got the NASDAQ also sitting roughly inside this red rectangle that's going to be sitting somewhere between 12,000 and 12,300 as well. So hope you guys enjoyed this video and a complete update on the inflation print. It's going to be quite interesting. Let me know your thoughts down in the comment section below. What do you think that inflation number is going to end up being, or what they are going to look like going into tomorrow? Let me know whether you believe CPI and core CPI year over year, are they going to be higher, lower than what the expectations are, and also on a month-over-month basis. So comment down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. And there is a 16% annual discount available till the end of this month. As always, happy investing, and I'll see you all in the next video.